Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to the Friday edition of How to Make Money Trading Stocks. We go every Friday at 11 a.m. Pacific time, and I'm glad you guys join us from, looks like it's from all around the globe. Eugene, welcome. I'll just make a brief stop right here and just, my prayers go out and thoughts go out to the folks in Nice. With the devastation that happened there yesterday, it's really sad to see what's going on globally. It's just crazy. Anyway, let's get going with what's going on in the market today. I was looking for Mike or Michael. Michael is in the process of doing all kinds of vacations because the summertime is short in Switzerland. And Mike Traeger is doing some research for us. I want to remind everybody that all the materials that we do present are for training purposes only. All the traders should always paper trade when they learn a new method prior to the risk of their own personal capital. If Michael was with us, we would be showing, here's his disclaimer. As you all know, at the Active Trend Trading, I like to do one training. We like to keep folks up, keep them, just basically continuously to sharpen the saw to become better traders. Well, Mike Traeger did an awesome job this week. He discovered a site that talks, and it's based on a Bukowski book. Those of you who are familiar with Bukowski know that he is a really good statistician, and he does the probabilities of various types of he uses a megaphone to teach, really. Anyway, he's a really good statistician, and he has put together a new book that's talks about the probabilities of candlesticks, and Mike and I were going through that, and we had our eyes open a little bit. And so there's some modifications. So this coming on Wednesday, the 20th, new candlestick discoveries, the probability of success. Not only does he talk about the probabilities of various candlestick patterns, he also touches base. With the concept of how long a pattern is valid. We utilize the candlesticks primarily for reversal signals, and so it was quite interesting to see which was the most successful patterns and which ones weren't. And so if we yeah, Scott, it is in addition to his encyclopedia. He now has a new encyclopedia out. It's about candlesticks, and so it's a great book. It's a little bit pricey. I think it's up there close to $200, or maybe it's $100 or something like that. And so we're going to digest it and basically hone it down, try to simplify it so that we can be watching just the candlesticks that tend to do the best, and that will help in our analysis. The book is Bukowski's. Mike is in the that's what he's basically studying this week, as he's not with us today. So, hey, this week, markets, for lack of a better term, defying gravity, but one of the main reasons is it's the only game in town. I was hoping Mike was going to be with us today to talk a little bit about what's going on globally. The Fed is restricted by law that they cannot, buy into the or legally buy into the U.S. stock market. There are questions out there whether or not they find other ways to invest in the market. But some of Mike's studying this past weekend, he came up with that over the last 6 months, the U.S. entities. Yes, it could, Scott. The Fed is talking today, could pour some damp water over the current rally. But one of the things that we chatted a little bit about last week is that how the foreign investors are basically, the U.S. market is kind of like the only game in town. It is kind of interesting to see bonds going up and the market going up and gold going up all at the same time, even though gold is doing a little bit of a pullback today. But one of the things that Mike found is that globally, the global central banks can, in fact, directly invest in the U.S. market. He was saying something like that, like the central bank of like Switzerland has several billion of dollars invested in Apple, for an example. And the other thing he discovered was that the institutions here in the U.S. and for IRAs and all that kind of stuff have actually over the last several months had a continuous outflow of funds. So one would think that that outflow would have a dampening effect on the market, but in fact something is coming in and pushing the market up. So the S&P, nothing goes up forever. I would like to see a pullback back into the moving averages for a potential long trade. When we get to the charts, at least when I put this slide together, we've had two bearish reversal signals over the last 4 days in the NASDAQ. Doesn't mean it's going to go into dive mode or anything like that, but it may be signaling it's time for at least a slight pullback back to a better buying position. And the Russell has been acting very strongly. Okay, more to come, or is it time for a pullback? Now we're approaching a time of year that I find very interesting. Over the last 5 years, the week after this week, the last 5 years have been weak and have provided tradable downside moves, some more significant than others. And so will July, will next week turn out to be, the start of at least a strong pullback in the markets? We'll see. How overvalued will the indexes get? This is an issue that continues to pop up its head. Right now it's being ignored. And the other thing that we look at also is I'm taking a look at the, I know IBD takes a look at the put-call ratio when it gets above a certain level where it tends to at least telegraph when the market is going to go back into rally mode. Well, it also works on the opposite side of that, is that right now the put-call ratio is extremely low, and that tends to be an indication where, okay, it's time to pull back because there's no fear. People are not buying the puts to hedge to the downside. So we'll see how that works out going forward into next week. But the information that I put together was in 2015 on 720. The markets rolled over. In 2014 it was on 723, 2013 it was on 723, 2012 719, and then in 2011 it was 722. So that's the last 5 years. During the week that came after monthly expirations, which is monthly expirations to the day, the last 5 years, the market has basically at least gone into a significant pullback that in some cases provided great buying opportunities to the upside. And in other cases, it was the first indication that the market was, in trouble and going to fall. So we'll see what transpires with that, but we are entering into that time of year between July and sometimes the mid part of August, can run all the way in. The weakness can hang around all the way up until into October, and then typically you'll get a nice little bounce going in from November into December. So we'll see how the rest of 2016 works out.
Hello, Dennis. Can you hear me?
Hey, Michael, we can hear you. Welcome.
Okay, how are you? And sorry for being late.
Okay, I was just covering Michael, what we're seeing in the market right now, and the question being is, will next week be a pullback week? Over the last 5 years, going back to 2011, the week that followed July expirations turned out to be a week that the market went into pullback mode, and in some cases it was more significant than that. With the big move up in the market this past week, here's where we were last week on the percentage of stocks above the 20-day moving average. And as you can see, this week, the percentage of stocks above the 20-day moving average is actually accelerated, jumped up here above the 80 level, and the spiders actually got up to about 216 and some change, and it's pulled back just a little bit from there. Again, Mike Traeger and I do not use this as an indication of when the market might roll over, but we at least pay attention to it, because oftentimes when it gets up here, as you can see, the last time it got up into these levels, it started dropping off, and so the stocks, this is back in 2000, actually it was, yeah, earlier this year. It got up this high in the March time frame and then kind of rolled over. However, take a look at what happened with the spiders. The spiders continue to climb even though the percentage of stocks that were supporting the move was on the decline. So those are the kind of things, when you see that kind of divergence, oftentimes it will lead to a more significant correction, as we finally saw here in the last part of May, where we dropped down, really well. And if this was an expanded chart, you would see we had something similar happening back here in November, December of 2015. At this point, again, I am not selling this market. In other words, I'm not going into the short mode. I will continue to look for the pullbacks and then trade the pullbacks until the pullbacks stop working. So, Michael, early on I mentioned that some of the global central banks, the foreign central banks to the U.S., are allowed to invest in the U.S. stock market, such as I think the Central Bank of Switzerland is allowed to invest in the market, has over $1 billion invested in Apple right now, and that the foreign investors may be who are propping up the current market conditions. Got any comments on that?
At least for the Swiss National Bank, I can say this is not a rumor, but it's a fact.
Okay.
They print a lot of Swiss francs, and with the money they buy basically a lot of euros, and with the euros they buy European bonds, government bonds, most of them AAA, and they don't know what to do with the money, so they also buy dollar, and with the dollar they buy in a percentage not that much, but as an absolute value they buy they have bought quite a lot of US stocks like Apple or even Valiant. You know the bio company that crashed. That was in the headline.
Yeah, wasn't the ticker on that was VRX or something?
Yeah, exactly, yeah.
Yeah, well, that's one of the things that Mike brought up in his review, and he talked about it on a Wednesday night, is that a lot of these purchases are being made with money that's just been printed by the government. So there's so it's kind of when a government prints money, as we've seen here in the U.S., that basically they're printing money, but it's not based on anything. and so in reality it devalues their currency. But in getting it invested, it's like buying stocks with zero collateral amounts. It's just, you know, it's just Swiss francs that have been printed out of air, right?
Exactly.
Okay, cool.
Yeah.
So, okay.
I had a long discussion this week with a professor who advises also our company, and he said, especially in Switzerland, it could work for a longer time period as long as foreign money trusts Switzerland.
As long as foreign money, okay.
Yeah, there is, as Switzerland is, and there's a little bit Singapore, but as a economy, Switzerland is almost the only country where people from abroad bring money to invest abroad.
Okay.
And so in theory, this could work for quite, the money printing could work as long as this flow continues.
Yeah.
Flow.
What would have to happen for it to stop working?
The risk is extremely big.
Okay.
So I would say it's typically if you write a lot of options that are far out of the money. Most probably, in most cases it works very well, but if it stopped working well, really into deep troubles. No, I think if big markets think that the Swiss franc is no safe haven, then the whole story doesn't work anymore. Or if big investors don't believe that Swiss banks are that safe,
okay,
then there's really a problem. I think these are really the two.
Okay.
Or in the other way around, that the Swiss franc gets more and more and more valuable. So in levels.
Okay.
Then theoretically they have to buy the whole world.
Okay. So on the percentage of stocks above the 200-day moving average, as you can see, the spiders have come up here and made some new highs. And at this time, you know, new highs basically broke in. I don't know who. Scott, was it you who was saying that the market was going to new highs last week? I can't remember exactly who it was. Somebody was saying that, and sure enough, it did. And so now we're into uncharted territory. Basically, where's the, you know, since there is no defined price action resistance up here, how far up will the markets likely go? I'll show you a couple of things I'm looking at when we get to the charts of the individual indexes. But as you can see, we're pushing higher, both the percentage of stocks above their 200-day moving average, jumping up to a high that we haven't seen since basically back in 2014, as it continues to push higher. At the same time as it does push higher, we are seeing that the price action okay, thanks, Scott. And anyway, as we have pushed higher, price action is extended away from its 8, 20, 50-day moving averages. There is a tendency to, you know, what we're looking for, you know, to be able to get long this market, because this is not a place to get long the market. What we're looking for is a place to get long the market is after it pulls back and then basically bounces from there. So how as of about 9:30 this morning, the Dow for the year is up 6%. It's also up positive. I forgot to change the color on that. It's up positive from last year's high. As you know, the S&P broke out to new highs and is up almost 6% for the year, and it's about 1% above its high that it made last year at 2134. The NASDAQ, slightly negative for the year, slightly negative from where it was last year, but both the NASDAQ Composite and the Russell positive for the year now, and still have some work to do to get back to the highs that we hit last year. And so, Michael, got a real quick question for you. How are you investing right now? I know you and I had a couple of emails about that. You're an option guy, right?
Yeah. Also, basically, yes. So, at least this year, it's been working good, and I started bit by bit to be short bonds and short S&P.
Okay, so you're basically, you have a limited position that is short both bonds and the S&P right now?
Yeah. So basically, I had at the beginning of the year basically a big cash position, and this I turned into shorts.
Okay.
So not the total amount, but I increased this part definitely.
And so, okay, and so
I'm desperately hoping for.
You know, there's a lot of people who are desperately hoping that that the market falls to the downside, but at the same time, and right now I'm basically because the S&P did in fact break out to new highs, that changes things. You know, that basically voided the sideways movement, and now, you know, gives us green lights to the tops, to the upside. And so I'm playing it so as to, you know, pullbacks to the moving averages to get long until it doesn't work anymore. And and so that's based on what the S&P is doing. The other two indexes have not caught up with that yet. So let's see what we got going here. So let's go over and look at the S&P. Now, you might think that this is an extremely busy chart, and it is an extremely busy chart. But there's a couple of things I wanted to highlight on today's chart. The horizontal lines are based on the extensions from this retracement from here, from the high on 623 down to the low on 627, when this is the Brexit drop. This is the Brexit response. What has happened, and as I said, once we got above this 2134 level, now we are in new high territory, and there is no basically we are in new high territory, and there's no price action, past price action, to define where is potential and probable resistance where we could get a turnaround. So I've done a couple of extensions for you today that I think are very interesting. One is once we break out through a 100% retracement, price action tends to go either be attracted to the 1236 extension, and which you can see on I want to say that was Monday of this week. It went right up to it and pulled back. Now, that was not quite a shooting star type candlestick, but it did pull back from there. That could have that could have been the start of basically a failed breakout. But as you can see on Tuesday, price action got hot, moved on up, put in a little bit of a hanging man on Wednesday, got hot, and one of the things that Mike and I have learned in reviewing Bukowski's information. A hanging man, which has been thought to be a fairly good reversal signal after a significant uptrend, actually turns out to be a very weak. It only has like a 30% probability of succeeding. So we found that very interesting. So anyway, it pops on up, passes through the 138 retracement, and then stalls out a little bit yesterday, and as you can see today, it basically got up to about to yesterday's high and is doing a pullback. The other thing that is of interest to me is the symmetry of the timing of this. Okay, if you measure the last major move in the index, which started back here on the 19th of May up to its peak, and then extend that down to the start of this major move, which is right here on the 27th. This line here, basically, which coincides with today, is the 100% extension line, which tells us that the move from here to here and from here to here now has symmetry. And it's where we could at least, take a stand and say there's a probability that that's where the market is going to reverse. Now, what would the reversal look like? I'm sitting here right now looking at. Let me get my pins up again. Here we go. What I would be looking at right now is one, pullback to this level, the 2134 level, which actually coincide with approximately the 8-day moving average, and kind of be in between the 8 and the 20, and then a potential rebound from there. And we can use these Fibonacci retracement levels or extension levels to kind of plan trades around. If you get back down here to the 2134, and you can put this on the spider, and it works just the same, 2134 level, and then starts to rebound and blows through this 123.6. That would be a higher low, and expect a push on up through the other area. The other piece of this, and I'll go back here, draw this line, is from this swing high to this swing low was that amount. And if we extend that up, activate it, move it on up to the current swing highs, it gives you almost the same retracement aspect down to about 2132. That's if the symmetry of the move from here and the pullback here is maintained up here. And, is that going to happen? In reality, we don't know. But that is something that would be very interesting. If price action closes where it is, but I thought you might find that interesting, that both Fib price extension and Fib time extension are all coming to a point right there. So there is significance in today and going into next week with what's going on with the Fib retracements. And so, okay, Scott, I'm not going to tell them that. Very good. So that's what I've got going on for the S&P. As you can see, if price action does close below yesterday's open, we will have a bearish engulfing pattern. The bearish engulfing pattern turns out to be one of the higher probabilities, somewhere pushing between 70 and 80% of success of at least a pullback. But in our studies, what we're learning is that while 70-80% is part of the probabilities, there's also the other probability, the other 30% of the probability that the signal may be voided. Some of the other things that we're picking up, and then we're going to be covering this on Wednesday night, is that typically with candlestick signals, and this is something, and I've been studying candlesticks for, gosh, the past 15 plus years, and even, you know, went through a course with Steve Bigelow and became a certified candlestick technician. And one of the other things that they talked about, or Bolkowski found out, is that a candlestick signal typically is valid only for about between 6 to 10 days. And if you don't get the move within that 6 to 10 days, then that signal is no longer it may be good information, but it's not necessarily valid any longer. Or if you do get the move you expect, you know, after the candlestick pattern, then we have to fall back on other technical analysis aspects to be able to manage the trade from there. And so, but anyway, we'll see where prices end up today. Yeah, like I said, if they end up where they are right now, we have a dark cloud. If it closes just below the 2157 level, we have a bearish engulfing. And again, bearish engulfing is one, and even a dark cloud is one of the higher probability reversal signals from the bearish side. And on the flip side of that, the bullish engulfing after a significant downtrend turns out to be one of the higher probability signals to get back up into a upside trade. So, okay, the NASDAQ, here's what I was talking about on the NASDAQ. We've gotten, get rid of, what I'm going to do here is I'm going to get rid of that. And if I measure it from this move from here to here, price action has pushed back up close to the 123.6. And if we take from here to here, as you can see, it actually, based on this last swing high to swing low move, it actually pushed up yesterday and closed above the 138 retracement. And now looks, you know, it put in a bearish engulfing on Wednesday, voided that yesterday, put in a spinning top yesterday, but as we stand right now, it looks as if the NASDAQ is going to be putting in another bearish engulfing pattern. Now those have a tendency to pile up, but again, you know, the options on the price action at this point is either to do one of three things. Is basically, yeah, we can continue to move on up because this fib extension up here is the 168 or 162, also a magnet for price action after it breaks up through a 100% retracement. So we are extended away from the moving averages. There, we get rid of that. We're extended away from the moving averages, and so the other thing that can happen is either we'll get a drop and a pullback back into the moving averages, or we'll move sideways along here until the moving averages catch up with price action. And as you can see, this steep of an incline. You know, some concerns that I have is this is a very steep power up. We're still working with an expanding wedge, which tends to be a negative type of pattern. Scott asked, is another bearish engulfing, will we gap up? You know, who knows, Scott? But one of the things that is clear about the signals that we see, basically these four candlesticks here, never mind that one, but these four here, what it's showing us is that, yeah, the bulls are coming in, the buyers are coming in and pushing things higher, but then the sellers are coming in. So it's which, you know, clearly at here, 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 and even much of this move up here, There was a little bit of profit taking here, but then we got the rebound off the 820, and it wasn't until actually this candle and then these 4 candles when it was at least evident or visible that sellers were coming in. And it could be to take merely take profit, because this is one heck of a move. I mean, from low to high, we're talking about a 10% move in the NASDAQ in that many days. And so, okay, so that's where we're at with the NASDAQ. What are we seeing over here on the weekly chart on the NASDAQ? Basically, I'm looking at, that's what I like about the true strength indicator and the momentum indicator, is that basically you can draw trend lines on it to see. And once those trend lines are broken, they tend to function similar to the price action. As we can see, is that basically we've made a new high, we've hit the 138 extension. Now the question is will the 138 extension hold? If it does, then we could look at moving on up here to the this level here. On the NASDAQ, on this S&P, I was doing some estimation on how far this particular move on the S&P could go, and we're looking at somewhere between 4240 up to about 4250-ish, I believe, is what the calculations, the measured move was. And that's another way to get an idea of how far things might go. Let's take a real quick look at the Russell. Guess I could blow this up a little bit. Here we go. Again, similar thing to the Russell. I did the, I'm going to reverse this. Remove drawings. Now let's see what kind of extension that this has made. Now again, the Russell has not broken out to new highs. It has hit this level of resistance, about the 1205 level, and is basically stalling out at that level. We do a fib retracement and extension from here. As you can see, we almost got up to the 1, 2, 3 retracement. If we go swing high, swing low there, as you can see, we get up to the 138, similar to the NASDAQ, and we're putting in, shooting, several bearish candles. This is a big bearish down day, not a reversal signal. But then we get a shooting star, and what appears like it may be an additional shooting star today. And so we're starting to get a series of dojis, or series of kind of inside days on this big day here, which tends to, again, be indicative of a potential move back down. But like the other indexes, because we have broken out the, we voided this old high here on the weekly chart, and we've gone into now a new, fresh, qualified uptrend. And so what do we do with uptrends? We wait for the pullbacks. We wait for the pullbacks into the moving averages or into other identifiable levels of support to plan our trades around there. Because at this point, these are not candlesticks that you buy, because they are saying, hey, I'm at least taking a break right now, and I'm very far extended away from my mean. So any questions on the market? And so, yeah, Bigelow does use T3 for his buying. Michael, you got any comments?
Not really so far.
Okay. Well, with that, let's push on through. So path of least resistance. I think the path of least resistance is that the uptrend will continue. We'd like to see a little bit of a sideways move for some additional consolidation to digest these gains, and even a slight pullback into, so any downside I'm looking at right now, I'm looking at for potential pullbacks to the moving average. Would it be prudent to short the VIX? Gino, I don't think so at this time, because the VIX, unfortunately, is also at fairly extreme lows. And so that would not be a great time to short it. One of the things, and I'll go, what time we got? I'll go back just real quick to a chart here. And here's another, thing that, where the VIX is right now, it favors a pullback. Do we have to pull back? No, the market's going to do what the market wants to do. But we are back down at the lows and going off of what has transpired in the past when it got down to these levels. At some point, it did a reversal and popped back up. But the market can, like even when it got down to these lows, just because it's down low doesn't mean the market's going to roll over. But no, I wouldn't short it at this point. I would be, the time you want to be shorting the VIX is when it's up here about the 24, 20, anywhere from 20 to 20, in this case 26, and outside the Keltner channels and or the moving average envelope. So for those of you who trade the VIX, the VIX is almost at a place where it would be a buy rather than a sell, but we're not getting the candlesticks to tell us that it's a buy. And there's other things out there right now. So that's it for path of least resistance. Still working the strategy number 3. I had a setback on that with two positions on the Tesla this week, but one of the things that I put out in the market updates is oftentimes when I get stopped out of a position, I will jump right back in, take an extra position, but I'll plan my stop, not where I'll take out the full $4.90 worth of stop loss, but I'll put the stop loss closer to where a swing high has been or swing low, depending on which side of the trade I'm on. And but I'll buy an extra, or I will sell an extra put, be naked or call, be naked that position, and clear it off the table fairly quickly. And that's what I did with Tesla this past week, and it bumped us back into being positive for the week. And I'll still be working on closing this gap between now and the end of July, and to see how, I want to get that closed and get this back on track. It's tracking okay, where it's going to basically pop out here about a 30% gain for the year. If we maintain this track, but I want to close the gap because my target for every year is 40%. Talking about the strategy of 3 trades, here is the latest on this, and this basically shows where this got stopped out for $4.90, the trade we placed last Friday on Tesla. I opened another position at $5.50 when the price action on Tesla was up at 226-ish. And that came through for us, and you can see here I sold one extra call, and that came through today very nicely. Still pushing up towards that 100% gain, and so far we've covered our initial investment of $9,000 and have added $7,000 to that if we closed it out today. Still working on the strategy 2, which is the seasonal gold trade. for between last week and this week, what has taken place is gold has, in fact, sold off a little bit more down here to the 126 level and now appears to be rebounding. That 126 level was almost direct symmetry with the last pullback and also the moving average bouncing off the 20-day moving average. With this, since this was a debit spread, with each day that it goes on pushing towards August, its value increases as long as I stay, kind of no lower than 126. Like to see it above 127 because that's when you both get the movement of the entity plus the theta decay working in our favor. So far we've collected about $786 on this particular trade. I've got 6 contracts left that will be closing out prior to the August expiration. My next stop losses are not stop losses, but my next targets are, I needed to modify this, anywhere from $4 to $4.50 on the next 3 contracts, and looking at $4.80 if we move on up from there, which will give us a little bit over 100% gain on this particular trade. Again, this goes with this gold seasonality. Okay, future presentations and events. The BAM meetings going on in San Jose. We're having 2 webinars here in July. The next one is coming up on the 19th. Wednesday night for the premium active trend trading members, we're going to be doing the surprising new candlestick probabilities. What are the strongest patterns and how long do they last? I'm working on videos right now on how to do strategy 3, timing entries, and more. I will not be having a Friday webinar next Friday because I will be on my way to, actually my wife's twin sister is getting married in Bakersfield, so I'll be back on the mainland, and we'll be on the mainland for about 2 months, and so we'll be having the in-person BAM meetings both in August and September and October, and and then for the month of August, my wife and I will be driving around the United States, just taking in the sights, and I'll be riding from the road and trading from the road, so it should be a lot of fun. I've got my hotspot, I've got my converter for my car, and so, Tracy, I don't know if I'm coming through Oklahoma City or not. I have to get your number in case we do. Us Texans, we don't, it's hard to come to Oklahoma. Just kidding. Just kidding. So remember, the active trend trading system is one, it's based on the 5 pillars of active trend trading, what to trade. Primarily I'm looking at high quality IBD growth stocks and or index ETFs. We furnish when to enter, when to exit, what strategy to use, and what to expect. I find that if traders will focus on first learning a system and then adding to the system various strategies and limiting the strategies. Trying to be a jack of all trades does not necessarily work well in trading, but just find ones you like to focus on and hit that really hard is the way to go. We offered 3 different strategies: stocks and index ETFs, strategy 1, basics options, strategy number 2, and then strategy number 3, which is the longer term selling weekly puts and calls against 2 longer hold positions. I'll just leave this up briefly. If you're watching the recording of this, this is what we offer with our premium and early warning alert service. And I also do early warning and active trend trading text alerts when we are getting ready to get into a position. So, Michael, that's all I have for this week. Would you like to make some additional comments?
Well, I mean, what was really good to see is that the bonds came down a little
Yeah.
bit, at least, or the correction seems to be quite stable.
Okay.
Then all all these commodities that went up like crazy, including the minor stocks, seem to stabilize a little bit at
Yeah.
least.
Yeah.
So,
And so,
so
okay. So, anyway,
and
basically,
many uh, blue chips like XOM and a lot of others have found new highs.
yeah, one of the things I think it was Scott was saying last week that whether well, he wasn't saying this exactly, but it's absolutely true, is whether we agree with the central bank's policies or not, at least right now, they are working to stabilize the market. So we have, we've got to take that in consideration and recognize that, even if they are printing money and buying stocks in U.S. firms, it is keeping the market up. And so we need to be aware that the market is being kept up on potentially wobbly legs. But heavens, I mean, I remember back in 1999, 2000, where where the folks were basically, the fundamental investors were screaming so loudly about how overvalued the dot-com stocks were, but dadgummit, the dot-com stocks just kept going up and kept going up and kept going up, and they kept going up until they didn't, and then basically we know what happened in the latter part of 2000, and we saw something similar to that happened, totally different reasons, but certainly bubbles that had formed that burst back in 2007, and the air finally ran out in 2008, and we recognize, hey, there's a lot of bubbles out there right now, but until those bubbles burst, we've got to play the direction that the market's giving us.
Yeah. I mean, and one interesting place to look right now is there were rumors around that Italian banks are basically bankrupt and need a lot of additional money.
Yeah.
And the ECB should help. And then there was an email going unattended into public that basically the ECB is saying the Italians first the Italians have to solve the problem, or the basic problem, and then we can see. And the discussion I had with our professor was there is no way that they will help out the Italian banks, because I mean it's relatively cheap compared to the lack of reputation and trust after the Brexit. If then really the German banks or really big European banks would get into problems because of Italy.
That's interesting. That is very interesting.
So he would say currently he would really bet that this problem short term will be solved.
Okay. And so, yeah, I've also read a couple of articles on rumors of some of the other European countries wanting to also remove themselves from the European Union. We'll see how that works out. But the Brexit at this point is no longer a market mover. It is, it had its short-term influence and had basically worked out to be a flash crash, and that was it. So
Yeah.
they can let Putin have Greece and Italy in a package deal. That's one option. I thought maybe that Germany might take over both Greece and Italy and let them run the tourist attractions for both Greece and Italy and make it kind of like a big Disneyland or Disney World, and that way Greece and Italy would be, in good shape again. So, okay, let's take a look at some stocks, guys. What do you want to look at? IP. Okay, let's take a look at YRD. Yard. Your deli. Okay. I'll expand this out a little bit. Okay, it's got okay. It appears as if it's basically a newer entity coming online. And Gino, I would want to be taking a look at the longer term, the fundamentals on doing with IBD stock checkup. Those of you not familiar with IBD stock checkup, if you are a member and a subscriber to IBD, the stock checkup is a, let me pull this up and slide it over real quick. And we can, you basically enter a ticker symbol up here. I want to know what its underlying fundamentals are. And you go here, and as you can see, hey, it's got pretty good composites. It's actually #1 in its group. And then it gives you a whole list of what makes, its composite rating, its EPS, where its group actually sets. And so that's one real quick place just to double check the, and I can go here and actually do the checkup. And I'll show you what comes up on that here again. It has a composite rating 98, which is good. It's better than all but 2% of the stocks that are out there. It shows that it's in a confirmed uptrend. It shows where it sits regarding where its industry group sits regarding 197 industry groups. It's in the upper half of the industry groups, so you'd expect it to outperform. It shows when earnings are due, its EPS, and basically I'll let you go and study the IBD information, but it tells us when how the EPS really rate out, and the red dots are fails and the green dots are good and the yellow dots are caution. And so sometimes stocks like this, which again it's #1 in its industry group, and as you can see in looking at the chart, it's acting like a #1. Where it's at right now, Gino, would be looking for, of course, a pullback, possibly to the 8-day moving average, or at least to this breakout level at 1730, around 1736. Doesn't have to be to the penny, to give us a potential of an entry into a new trade. But this has been looking pretty good. So let's see what else we got. GILD. Okay, GILD, excuse me. It's down to a more manageable time frame on the weekly chart. Again, it is right up against a level of resistance. Now, if it busts out this level of resistance, then you've got basically a $10 move, which will take it back up to its old high and actually fill this gap down with earnings. What we may be seeing here, Scott, in this move from here to here, and basically this move from here on up, is preparations for earnings. It's going to be on the 725, which is 2 weeks from now. It's the Monday, a little bit over a week from now, and so it's looking pretty good. Basically it is back into at least a stronger move. Volume, for as far as buying volume, It does a lot of shares per day, but it's not above average. And so anyway, this is a nice little pullback and would have been a good buy this morning or a good buy yesterday at about 85 bucks. Okay. Hey, Gino, the guy who left the play, who asked about YRD, Gino has left. And so, yeah, you get a breakout above this level here. It's holding the, on GILD is holding support here at the 50-day moving average. And if the 8 and the 20 break back through and get a bullish cross to that 50, there's a good chance it's going to go back up into an uptrend. Even a target up here at the 92 or the midsection of this gap down over here, which would be about 94 to 95. It's a great target. And so longer term, Dorothy, you're absolutely right. It is in a downtrend. However, it is demonstrating one of Jesse Livermore's favorite entries into a position, which is basically the shakeout plus, and that was at this point here, shakeout plus 3 or 2, how you want to do it, and that has moved up from there very nicely. It looks like it's in the early stages of trying to reverse its downtrend. And if you can catch the right stock when it's in the early stages of reversing that downtrend, away you go. IP. Oh, this is international paper. Yeah, this is a commodity. Daily wise, it's just breaking out of this trading range, which gives you a level of resistance down here between, let's say, 44 up to 44.60-ish. You've broken out of this swing high here. And if we, the thing that's really cool, and this is one of the things to remember, is if you get a similar thrust, okay, here's the first thrust, then you get a pullback, reaction, actually down to here. Now it's in the process of doing its next thrust. Now, oftentimes these secondary thrusts, Scott, will be of approximately equivalent to the thrust that preceded it, and it does thrust up in about the same magnitude, it's going to put it back right up here in its resistance zone that was developed from the highs it hit at the beginning of 2015, 54 up to 58. And target move on this with this breakout is 44 to 39ish, looking at about $5 initial move, so from 44 up to approximately 49. And so could it go up and back up to approximately to its highs? Yeah, I mean, based on initial weekly thrust, reaction back down to support, and now it appears as if it's into its new thrust, and so it could move up from there. So, okay. A couple of stocks I'm looking at for going into next week. I like AVGO. I highlighted this. AVGO, I highlighted it on Wednesday when we got this shooting star followed by this bearish engulfing. That pattern was basically voided with today's move. I'm still looking at this as a potential weakness here. It doesn't have earnings are already passed, and so I'm still looking at this as a potential move to the downside if the market weakens. It's also up at resistance that is marked by these past highs over here and struggling. We're putting in a hanging man type of dragonfly doji today, but again, that's not a very reliable signal. And so we'll see if we get a move back down below 160, that may in fact pull all the way back down to the lower part of the Keltner channel, or at least back to 150. It's a $10 move. They've got great open interest on their options, and right now I'm doing a trade in this that expires next week. I sold the call credit spread. I sold the 160s by 165s based on this signal here, and I'm watching that very carefully to not let it get away from me. And I got about $2 for it when it was down here, and so I'm watching that to make sure it does not get away from me. I would like to add to that a put position, but it has to show some additional weakness before I do that. Okay, others that we're looking at, remember Netflix, and NFLX, there we go, Netflix. Netflix pushing up a little higher today. Remember, it has earnings on 7/18 after the market. That's next Monday. For those of you who are trading along with Tesla, and this will be the last one I take a look at, Tesla has found support or found a level of equilibrium right now at about the 220 level. If this ledge fails at the 219.66 level, then Tesla is probably going to go back down here and revisit somewhere between 216 all the way down to perhaps even 210. It has earnings coming up on August 3rd, and so I know, let's see, who's trading this with me? I'm looking for the name. No, but if you watch the recording, what I'd be looking at, if we get back down on, let me go to it. Let me go to the day, back to the daily chart. There we go. If we get back down into this level here, where I get to the 216 level or below that, at that point, if that happens quickly early next week, I will basically do a strangle where I buy a put that is kind of like at the 210 level or maybe even the 205 level, and I'll buy a call that's probably up at the 220 to 225, and that expire the week of earnings. That's the week of 8/3, and then over the next 2 weeks I will sell premium against that and hopefully pay for that going forward. Has Tesla ever had a profit? No, it has not. But their CEO talks really good. No, one of the things I like about Tesla is it puts in great patterns, Tracy. It's a great company with some great ideas. Will it ever be profitable? We shall see. So with that, Michael, I'm going to call it a day and see if we have some trades with Tesla. At this point, guys, I'm sitting there and I'm looking at probably the selling the 220 call against it for next week, and it's not quite in a position to do a put because I expect a little bit further fall down. So, Michael, have a great weekend. Everybody else?
Yeah, you too.
Everyone else, have a great weekend, and God bless. Be safe out there. Yeah, David, just real quick, if you're still listening, on the SPYs, I'm looking at somewhere between the 216 and maybe the 215 call going into next week. That's basically anticipating that pullback at least to the moving averages. Have a great week, guys.